The National Bureau of Statistics data shows that the factory gate prices in China hit a 13-year high in May. The Producer Price Index, or PPI, rose to 9% in May from a year earlier, up from a gain of 6.8% in April. Meanwhile, China's Consumer Price Index, or CPI, rose by 1.3% in May from a year earlier. So for more on this and China's economy, joined us on the line now is Andy Mok, Senior Research Fellow at the Center for China and Globalization. So Andy, first of all, China's PPI rose to 9% in May from a year earlier, and this is the highest rate since the year 2008. So how do you read into this PPI figure?
Well, thanks for having me, Zhaoyang. I think that this producer price index increase of 9% is very, very significant. First of all, we're looking at almost double-digit inflation. 9% is not that far from 10%. So this is very significant. And of course, we know that this is the highest level since 2008. But here's the really, I think, interesting and significant piece of this. The median forecast for a survey of economists conducted by Bloomberg was an 8.5% increase. So what this means is that the producer price index came in higher than expected. And this is the danger that inflation poses, is that when inflation outpaces expectations, what happens, of course, is that expectations have to increase. And this is what can fuel an inflationary spiral, which, if the global economy does experience such an inflationary spiral, many countries, in particular the U.S., will be at grave risk.
And meanwhile, the CPI rise by 1.3%. What does it tell us? And what does it mean for the economy when there is a gap between the CPI and PPI growth rates?
Well, there's certainly a disconnect between PPI and CPI. And I think the main reason in China for this is really twofold. First is that the retail economy, the consumer economy, I think is still recovering relative to the manufacturing side of the economy. So this is one of the reasons. Related to this, the second reason is that many manufacturers have not been passing through the price increases as yet. So we may see down the line, if as the consumer market strengthens domestically in China, and inflationary pressures, if they do continue to mount on the input side, that we may then see a rise in consumer inflation as a trailing indicator of the producer price index increases.
And now let's take a look at the foreign trade. China's imports and exports all grew at a fast pace over the first 5 months of this year. And imports even, grew at their fastest pace in 10 years in May. So how do you explain that? And how important is foreign trade for China's economy now?
Well, I think that the rise in imports, are a positive signal for the Chinese economy, of course, driven by two things. One is final demand. Even though the pandemic has caused tremendous economic damage, it has also been very good for a number of sectors at which China plays a central role. I said that the consumer economy is not as strong as the manufacturing side of the economy in China. But that being said, China did weather the crisis, the COVID pandemic, much better than most, if not every country around the world. And as a result, consumer demand, while it has not been as strong as the manufacturing side, I think has been very strong relative to economies around the world. So both of these contribute to the growth in imports. Overall, of course, we know that foreign trade has become much less important to China's economy as the domestic economy has grown. So while it's increased, of course, in absolute terms, in relative terms, it makes a smaller contribution to China's economy than it did 15 15, 20 years ago.
And China-U.S. trade reached 1.8 trillion yuan or 280 billion US dollars in the first 5 months of this year. This is more than 41% increase year on year. So how do you see the trade ties between the U.S. and China in a time of competition?
We see in these trade figures that, in fact, the U.S. is quite dependent on China, not only as a source of inexpensive, high-quality goods that really provide the foundation for the prosperity of many, many, many consumers in the United States. But also there's a number of other key touch points as well. Look at government debt, for example. China is one of the largest holders of U.S. government debt. So that there are a number of areas where I think the U.S. is dependent on China. So it is, in some sense, contradictory and self-defeating that it is pursuing a more confrontational stance towards China, but yet is very dependent.
And besides foreign trade and investment, what other parts are playing quite an important role in China's economy today? Is that domestic demand, housing market? What do you think are they?
Well, certainly I think the most powerful drivers for China's economy are domestic. And investment, of course, is still important, infrastructure investment. If we look at the real estate market, of course, that has been very strong. Consumer demand, while it has encountered setbacks because of COVID-19 and the related impact on employment on sectors in particular, such as travel, hospitality, etc., is coming back. So there are two things going on here. I think one is there's a cyclical rebound, but there's also a longer-term structural rebalancing as we're seeing through the dual circulation strategy. So these are, I believe, the longer-term drivers. Of course, technological innovation as well is another very, very important driver of China's economy.
And in its latest global economic prospects, the World Bank forecasts China's economy to grow by 8.5% this year. This is up by 0.6 percentage point from the previous projection. So what do you think are the main, driving force for China's economy?
I think there are two of them, Zhao Yang. So one is the overall economic rebound as many parts of the world get COVID under control, and in particular, as the U.S. opens back up. The U.S., of course, still is the largest economy in the world in nominal terms, is very important as a market for China. So this is an important source of GDP growth. But also the rebound in China as well. And there is, I think, the consumer side of the economy will play a role here. And again, these longer-term initiatives as part of the dual circulation strategy, the new infrastructure plan, these other investments in the future that will also contribute to China's economic growth.
And what do you expect for China's monetary policy for this year?
Well, I think given where the economy is and the global outlook, I think what the Chinese monetary policy will continue to be prudent. Certainly there doesn't seem to be need for any dramatic changes at this point, but there still is a lot of uncertainty in the global economy, which of course has an impact on China's domestic economy. So I think things like whether inflation will indeed be transitory, as some think, or whether we are witnessing a longer-term inflationary spiral, I think will be one of the key determinants of what monetary policy will be in China.